Hello everyone, welcome to the 59th episode of me learning how to trade in Forex. So in the last video we went through how to use Fibonacci retracements. We learned about what Fibonacci, the Fibonacci I guess pattern is. So like it's basically every third number is the previous two numbers added up together. We got the Fibonacci retracement levels, so I think the main thing we got from that is we don't really know where the bounce could be. So so they should always be looked at as areas of interest. And in this lesson, we're going to cover Fibonacci retracements are not foolproof. So I think there's going to be some examples showing us where the Fibonacci retracement doesn't work. So let's get started. Fibonacci retracements are not foolproof. So, Fibonacci retracements are not foolproof. Data is 28th. Back in grade 1 we said that support and resistance levels eventually break. Well, seeing as how Fibonacci levels are used to find support and resistance levels, this also applies to Fibonacci. Fibonacci retracements do not always work, they are not foolproof. Fibonacci retracements do not always work. They're not foolproof. Don't be a fool, be careful when you use the Fibonacci retracement tool. Let's go through an example when the Fibonacci retracement tool fails. Below is a 4-hour chart of GBP/USD. Here you can see that the pair has been in a downtrend, so this one here. So you decide to take out your Fibonacci retracement tool to help you spot a good entry point. You use a swing high at 1.5383, so that's it, with a swing low at 1.4799, that's it. You see that the pair has been stalling at the 50% level for the past couple of candles. So 50% level is here. Oh, so like these candles. You say to yourself, oh man, that 50% fib level is holding, baby, time to short this sucker. So I'm assuming the downtrend is here, it'll go here, and then it's going to go down like that. You short at market and stay daydreaming that you'll be driving down Rodeo Drive in your new Maserati with Scarlett Johansson or with your lady rider Ryan Gosling in the passenger seat. Now, if you really did put an order at that level, not only would your dreams go up in smoke, but your account would actually take a serious hit if you didn't manage your risk properly. Take a look at what happens. So this is 50% level and bam, it went up. Yikes, it broke through all levels. It turns out that swing low was the bottom of the downtrend and the price began to rally above the swing high points. What's the lesson here? While Fibonacci retracement levels gives you a high probability of success, like other technical tools, they don't always work. You don't know if the price will reverse to the 38.2% level before resuming the trend. Sometimes it may hit 50% or the 61.8% levels before turning around. Heck, sometimes the price will just ignore Mr. Fibonacci and blow past all levels, just like how LeBron James bullies his way through the lane with sheer force. Yeah, so this is when, in the last lesson I said, we don't really know where it's gonna do the bounce basically. So remember, the market will not always resume its uptrend after finding temporary support or resistance, but instead continue to go past the recent swing high or low. Another common problem using Fibonacci retracement tool is determining which swing low or swing high to use, People look at charts differently, look at different time frames, and have their own fundamental biases. It is likely that Stephen from Pipsology and the girl from Pipanorama have different ideas of where the swing high and swing low points should be. The bottom line is that there is no absolute right way to do it, especially when the trend on the chart isn't so clear. Sometimes it becomes a guessing game. This is why you need to hone your skills and combine the Fibonacci retracement tool with other tools in your Forex toolbox to help give you a higher probability of success. In the next lesson, we'll show you how to use the Fibonacci retracement tool in combination with other forms of support and resistance levels and candlesticks. Inconsistency in determining which swing low and swing high to use, as different traders use different time frames and look at charts differently. How to use Fibonacci retracement for support and resistance. Like we said in the previous lesson, using Fibonacci levels can be very subjective. However, there are ways that you can help tilt the odds in your favour. Whilst the Fibonacci retracement tool is extremely useful, it shouldn't be used all by its lonesome self. It's kind of like comparing it to NBA legend Kobe Bryant. Kobe was one of the greatest basketball players of all time, but even he couldn't win those titles by himself. He needed some backup. Pass, just get the rebound. Similarly, the Fibonacci retracement tool should be used in combination with other tools. Fibonacci retracement tool should be used with other tools. In this lesson, let's take what you've learnt so far and try to combine them to help us spot some sweet trade setups. Are you all ready? Let's get this pip show on the road. Fibonacci retracement plus support and resistance. One of the best ways to use a Fibonacci retracement tool is to spot potential support or resistance levels and see if they line up with Fibonacci retracement levels. If Fibonacci levels are already support or resistance levels and you combine them with other price areas that a lot of other traders are watching, then the chances of price bouncing from those areas are much higher. Spot potential and see if they line up them. So use the Fibonacci retracement tool to spot potential support and resistance levels and see if they line up with Fibonacci retracement levels. Okay, if Fibonacci levels are already support and resistance levels and you combine them with other price areas that a lot of other traders are watching, then the chances of price bouncing from these areas are much higher. So if Fibonacci levels are already support and resistance levels, combining them with other price areas that a lot of other traders are watching, combine them with other areas that a lot of other traders watch, then the chances of price bouncing from these areas increases the chances of price bouncing from those areas. Let's take a look at an example of how you can combine support and resistance levels with Fibonacci levels. Below is a daily chart of the USD CHF. As you can see, it's been on an uptrend recently. Look at all those green candles. You decide what you want to get in on this long USD CHF bandwagon. But the question is, when do you enter? You bust out the Fibonacci retracement tool using the low at 1.0132 on January 11th for the swing low, and the high 1.0899 on February the 19th for the swing high. Now your chart looks pretty sweet with all those Fibonacci retracement levels. So resistance turns support at 1.0510. Now with a framework to increase our probability of finding a solid entry, we can answer the question, where should you enter? You look back a little bit and you see that the 1.0510 price was a good resistance level in the past, and it just happens to line up with 50% of the Fibonacci retracement level. Now that it's broken, it can turn into support and be a good place to buy. So where are we? This is that here. So I'm guessing we bought somewhere around here. If you did set an order somewhere around 50% fib level, you'll be pretty happy a camper. Eventually the price broke through the former high and continued its uptrend. Tested the support several times but couldn't break through. So 1, 2, 3. There would have been some pretty tense moments, especially on the second test of the support level on April the 1st. So around here. You can see that the lows actually dropped below that 50%. Price tried to pierce through the support level but failed to close below it. Eventually the pair broke past the swing high and resumed its uptrend. You could do the same setup on a downtrend as well. The point is, you should look for price levels that seem to have been areas of interest in the past. Look for price levels that seem to have been areas of interest in the past. If you think about it, there's a higher chance that the price will bounce from these levels. Why? First, as we discussed in grade 1, previous support resistance levels are usually good areas to buy or sell because other traders will also be eyeing these areas like a hawk, as there's a higher chance that the price will bounce from these levels. First, as discussed in grade 1, previous support or resistance levels are usually good areas to buy or sell because other traders will also be eyeing these levels like a hawk. Previous support or resistance levels are usually good areas to buy or sell because other traders will also be eyeing those levels. Second, since we know that a lot of traders also use the Fibonacci retracement tool, they may be looking to jump in on these fib levels themselves. Other traders also use the Fibonacci retracement tool, so they may be looking at those Fibonacci levels as well. With traders looking at the same support resistance levels, there's a good chance that there's a ton of orders at those price levels. So traders looking at the same supports and resistance levels, there's a good chance that there are a ton of orders at those levels. Whilst there's no guarantee that price will bounce from these levels, at least you can be more confident about your trade. After all, there is strength in numbers. Remember that trading is all about probabilities. If you stick to those high probability trades, then there's a better chance of coming out ahead in the long run. Right. How to use Fibonacci retracement with trend lines. Another good tool to combine with the Fibonacci retracement tool is trend line analysis. Trend line analysis can also be used with Fibonacci retracement tool. After all, Fibonacci retracement levels work best when the market is trending, so this makes a lot of sense. Remember that whenever a pair is in a downtrend or uptrend, traders use Fibonacci retracement levels as a way to get in on the trend. So why not look for levels where Fib levels line up right smack with the trend? Here's a 1 hour chart of AUD JPY. As you can see, the price has been respecting a short-term ascending trend line over the past couple of days. Yep. You think to yourself, that's a sweet uptrend right there. Right there, I want to buy AUD JPY even if it's just for a short-term trade. I think I'll buy once the pair hits the trend line again. Before you do that though, why don't you reach for your Forex toolbox and get the Fibonacci retracement tool out. Let's see if we can get a more exact entry price. Swing low, swing high. Next support. So it's probably going to bounce here maybe. Here we plotted the Fibonacci retracement levels by using the swing low at 82.61 and the swing high at 83.84. Notice how the 50% and the 61.8% fib levels are intersected by the rising trend line. That's the 50% one, and that's the 61.8% line. I don't think 50. Oh no, this is the 61.8. I'm assuming. No, because it's all below it. So 60's here, 50's here, but it hasn't intersected though. So, huh? Oh right, they extended the these levels serve as a potential support levels. There's only one way to find out. Price broke through the previous swing high. Look at all those green candles. Price broke through the previous swing high. Trend line plus 61.8%. Fib level held. Guess what? The 61.8% Fibonacci retracement level held. As price bounced there before heading back up. If you had set some orders at level, you would have had a perfect entry. A couple of hours after touching trend line, price zoomed up like Astro Boy, bursting through the swing high. Aren't you glad you got this in your trading toolbox now? As you can see, it does pay to make use of the Fibonacci retracement tool, even if you're planning to enter on a retest of the trend line. The combination of both a diagonal or horizontal support or resistance level could mean that other traders are eyeing those levels as well. Take note though, as with other drawing tools, drawing trend lines can also get pretty subjective. You don't know exactly how other traders are drawing them, but you can count on one thing, that there's a trend. You see that an uptrend is developing, you should be looking for ways to go long or to give you a better chance at profitable trades. You can use the Fibonacci retracement tool to help you find potential entry points. Can use the Fibonacci retracement tool to find potential entry points, I guess. Okay, so do that. Next one, how to use Fibonacci retracement with Japanese candlesticks. So, if you've been paying attention in class, you know by now that you can combine the Fibonacci retracement tool with support and resistance levels and trend lines to create a simple but super awesome trading strategy. But we ain't done yet. In this lesson, we're going to teach you how to combine the Fibonacci retracement tool with your knowledge of Japanese candlestick patterns that you learned in grade 2. When combining the Fibonacci retracement tool with candlestick patterns, we are actually looking for exhaustive candlesticks. When combining Fibonacci retracement tool with candlestick patterns, we're looking for exhaustive what's going on? Exhaustive candlesticks. I don't know why spell check isn't working still. If you can tell when buying or selling pressure is exhausted, it can give you a clue of when the price may continue trending. Finding clues about when buying or selling pressure is exhausted can give you a clue of when price may continue trending. We here at babypips.com like to call them Fibonacci candlesticks, or fib sticks for short. Pretty catchy, eh? Let's take a look at an example to make this clearer. Below is a 1 hour chart of EUR/USD. So it's in a downward trend overall. The pair seems to have been in a downtrend the past week, but the move seems to have paused for a bit. So I'm assuming that pause is like, oh well, it pauses and it's not in downtrend anymore, I guess. Will there be a chance to get in on this downtrend? You know what this means. It's time to take a Fibonacci retracement tool and get to work. As you can see from the chart, we set our swing high at 1.3364 on March the 3rd, so that's here. With swing low at 1.2523 on March the 6th, so that's here. Since it's Friday, you decided to just chill out, take an early day off, and decide when you want to enter once you see the charts after the weekend. Whoa, by the time you pop the opening charts, you see that the EUR/USD has shot up quite a bit from its Friday closing price. Whilst the 50% fib level held for a bit, buyers eventually took the pair higher. You decide to wait and see whether the 61.8% fib level holds. After all, the last candle is pretty bullish. Who knows, the price might just keep shooting up. A doji's right smack on the fib level. Well, we look at that. A long-legged doji has formed right smack on the 61.8% Fibonacci retracement level. If you paid attention in grade 2, you know that this is an exhaustive candle. A long-legged doji. So that was this one here. Pay attention to the preceding candlesticks when a doji forms. If a doji forms after a series of white Maribozus, dojis signal that the buyers are becoming exhausted and weakening. White Maribozus, so this is a white Maribozu, isn't it? Or whatever, it's a green one, but same thing as a white one, isn't it? Because the white one is a bullish one, so the closing price is above the opening price. Doji signals that buyers are becoming exhausted and weakening. Has buying pressure died down? Is resistance at the Fibonacci retracement level holding? It's possible. Other traders were probably eyeing that fib level as well. Is it time to short? You can never know for sure, which is why risk management is so important. But the probability of reversal looks pretty darn good. Looks like buyers were exhausted. Look at all those red candles. Eventually reach the swing low. If you had shorted after that doji had formed, you could have made some serious profits. Right after that doji, the price stalled for a bit before heading straight down. Take a look at all those red candles. It seems that buyers were indeed pretty tired, which allowed sellers to jump back in and take control. Eventually the price went all the way back down to the swing low. That was a move of about 500 pips. That could have been your trade of the year. Looking for fib sticks can be really useful, as they can signal whether a Fibonacci retracement level will hold. So looking for that exhaustive candlestick. Looking for the exhaustive candlestick. Looking for look as they can signal whether a Fibonacci retracement level will hold. If it seems that price is stalling on the fib level, chances are that other traders may have put some orders at those levels. If it seems that price is stalling on a fib level, Fibonacci level, chances are other traders, not just buyers, other traders may have put some orders at those levels. This would act as more of confirmation that there is indeed some resistance or support at that price. This would act as more confirmation that there is indeed some resistance or support at that price. Another nice thing about the fib sticks is that you don't need to place limit orders at the fib levels. You may have some concern about whether support or resistance will hold, since we're looking at a zone and not necessarily specific levels. This is where you can use your knowledge of candlestick formations. You can wait for a fib stick to form right below or above a Fibonacci retracement level to give you more confirmation on whether you should put in an order. If a fib stick does form, you can just enter a trade at the market price, since you now have more confirmation that level could be holding. Another nice thing about fib is that I don't need to place limit orders on the fib levels. You may have some concerns on whether the support resistance will hold, since we're looking at a zone and not specific levels. You don't need to place limit orders at fib levels. Don't need to place limit orders at Fibonacci levels. Right. Okay, we're on to Fibonacci, what is it called? Extensions. Extensions to know when to take profit. The next use of Fibonacci will be using them to find take profit targets. But always keep in mind Zombieland rules of survival number 22. When in doubt, know your way out. Fairs? Let's start with an example of an uptrend. In an uptrend, the general idea is to take profits on a long trade at a Fibonacci price extension level. You determine the Fibonacci extension levels by using 3 mouse clicks. First, click on a significant swing low, then drag your cursor and click on the most recent swing high. Finally, drag your cursor back down and click on any of the retracement levels. This will display each of the price extension levels, showing both the ratio and corresponding price levels. Pretty neat, huh? Let's go back to that example with the USD CHF chart we showed you in previous lesson. So this is the one here. So there's an uptrend, you can see here. Tested the support several times. Right, okay, but couldn't break through. Eventually price broke through the former high and continued its uptrend. The 50% fib level held strongly as support, and after 3 tests, the pair finally resumed its uptrend. In the chart above, you can even see that the price rises above the previous swing high. Yep. Let's pop on the Fibonacci extension tool to see where would have been a good place to take off some profits. So here's that trend line again. That bit there is that bit there. So we got here. So that area is that area. Here's a recap of what happened after the retracement swing low occurred. Price rallied all the way to 61.8% level, which lined up closely with the previous swing high. It fell back to the 38.2% level where it found support. Price then rallied and found resistance at the 100% level. A couple of days later, the price rallied yet again before finding resistance at the 161.8% level. These would have been good levels to take off profits. So these look like support resistance levels as well, or just resistance levels, because that's a resistance level here, that's a resistance level here, and that's another resistance level. As you can see from the example, the 61.8%, 100%, 161.8% levels all would have been good places to take off some profits. Now let's take a look at example using Fibonacci extension levels in a downtrend. In a downtrend, the general idea is to take profits on a short trade at a Fibonacci extension level, since the market often finds support at these levels. Let's take another look at the downtrend on the 1 hour UR/USD chart we showed you on the Fib Sticks lesson. So we got the chart here. Looks like buyers were exhausted. Look at those red candles. Yep, the downtrends and then going down. Yep. So this is the 500 pip profit one, I think. Here we saw doji form just under the 61.8% fib level. We saw doji form just under the 61.8% level. Where's 61.8%? That one here. It's that doji there, isn't it? Price then reversed as sellers has jumped back in and brought price all the way back down to the swing low. Yep, so swing lows here. Let's put up that fib extension tool and see where we could have been some good places to take profits had we shorted at the 61.8% retracement level. All these support levels, all these levels provide some support. So in an uptrend, you should take profit at the resistance levels. In a downtrend, you should take profit at the support levels. Is what I'm getting at. Here's what happened after the price reversed from the Fibonacci retracement level. Price found support on the 38.2% level. So that's that one. The 50% level held as initial support, then became an area of interest. So that's that one here. The 61.8% level also became an area of interest, so that's that one here, before price shot down to test the previous swing low. If you look ahead, you'll find out the 100% extension level also acted as support. Uh, 100%. I don't really know where the 100% level is, to be honest. Oh, it's down here, right? This is the 100% level. Because that bit lines up with that bit, so that's the 100% level. Right, okay. So, basically, when going long in uptrend, take profits at resistance levels near the Fibonacci levels. When going short in downtrend, take profits at support levels near the Fibonacci levels. We could have taken off profits at the 38.2%, 50%, or 61.8% levels. All these levels acted as support, possibly because other traders were keeping an eye out for these levels for profit taking as well. Yep. The examples illustrate that price finds at least some temporary support or resistance. Resistance at the Fibonacci extension levels. Not always, but often enough to correctly adjust your position to take profits and manage your risk. Price sometimes find at least some temporary support or resistance at the Fibonacci extension levels. Not always, but often enough to correctly adjust your position, take profits and manage your risk. Of course, there are some problems to deal with here. First, there is no way to know which exact Fibonacci extension levels will provide resistance. However, there is no way to know which exact Fibonacci extension level will provide resistance or support, right? Any of these levels may or may not act as support or resistance. May provide support or resistance. Any of these levels may or may not act as support or resistance. Another problem is determining which swing low to start with from in creating the Fibonacci extension levels. Oops, not that one. Support or resistance. One way is from this last swing low, as we did in examples. Another is from the lowest swing low of the past 30 days. To select the swing low, either select the last swing low or from the lowest swing low in the last 30 days. In the last 30 bars, not days, Jesus. Last 30 bars. Why 30 though? Because the time frame would be, so if every trader's got different time frame as well, then their 30 bars is going to be different from someone else's 30 bars. So yeah, it's difficult. Again, the point is that there is no one right way to do it. Okay, yeah, first, but with a lot of practice, you'll make better decisions at picking swing points. So there is no one way to picking swing high and swing low. You will have to use your discretion in using Fibonacci extension tool. You will have to judge how much longer the trend will continue. Later on, we will teach you methods to help determine the strength of a trend. For now, let's move on to stop loss placement. Okay, I'm going to leave this episode here actually. I think this is a good place to stop. So in the next video, we're going to cover how to use Fibonacci to place your stop so you lose less money. So yeah, thank you guys for watching, and I will see you guys then. Peace.